we look for. If you have an interest in our program, you'd like to get a little more detail, interact a little more to make a good decision, all that simply requires is replying back to one of the follow-up emails we send, or simply call into the office. We'd be happy to set up a phone appointment and discuss things in a little more detail. During the course of these presentations, as I said, we can sometimes find live trading opportunities, but given the premise for some of the reasons why people are attending, we go into an overview of what it is we look for. So let me just kind of establish those ground rules here at the beginning of the presentation. What I'd like to do first is notate time of day. We can see that we're starting our session at 10 o'clock. Forex, one of the things that the characteristics of the Forex is it typically reaches a particular point at this time of day on a fairly regular basis. And so we teach 8 black and white strategies, and so one of the things we can do is, based on time of day, we can start to anticipate potentially which one of those strategies are now going to simply come into play based on time of day. So when we look over here, one of the things we'll talk about here is, so I'm going to blow up a chart of the euro versus the dollar. And I'm going to go to a little larger time frame here. Now what we're looking at now is a daily chart. Each one of these candlesticks represents one day of price activity. For those of you who are new to candlesticks, the green candlesticks represent up candlesticks or price closed higher than it opened. The red candlesticks represent down candlesticks or price closed lower than it opened. So each one of these candlesticks represents one day of price activity. So we look at this specifically because now we can start to evaluate and look for where we can start to plan our potential trading opportunities. Now let me just at this point just tell you a little bit about my background. I've been involved in the markets now in some form or fashion for coming up on 2 decades. In the course of that period of time, over half of that period of time, I've been involved in trading in an online venue. During that period of time, now coming up on almost 9 years, I've been a part of the development of a number of popular trading programs, facilitated thousands of individuals to be successful at trading in an online venue on an intraday basis. And during the course of my career, I can see that typically what happens is people fall into 2 distinct categories. There's the category of those that are inconsistent traders, where they make money, they give it back, they make money, they give it back, but there's no consistency in their profit taking. And then there's the category of traders that can consistently grow profit. And there's also 2 direct correlations to why this happens. And so one of the things as we talk about planning a trade, what I'd like to focus on is that first category of those individuals that are inconsistent in their trading process. The reason why I mention it in that way is because a lot of times what happens is when we look at our trading, sometimes we feel like because we have some successes is that what we're doing is the correct formula. When in fact the reality is obviously our objective is to consistently take profit and consistently grow our accounts in a positive direction. Certainly we are going to have trades that don't work out for us, but over the long haul what we'd like to see is positive growth in our trading accounts as opposed to flat or negative growth. And a lot of times when I interact with traders, they live in sort of a sense of false success because although they've made some money in the marketplaces using a particular application, when I probe and ask a few more questions and get a little more detail, what I come to find out is typically most of them cannot consistently take profit, and over the long haul they're not growing their account in a positive direction. And the reason for this is because they typically gravitate to a technology-based trading application first. Now when I use the term technology-based trading application, this is basically an umbrella that encompasses trading software, trading systems, black box systems, clusters of indicators, proprietary indicators, anything where we use technology to determine or to make the decision when we're going to trade. And so the key correlation to why I see people are not successful is they gravitate to technology first, thinking that technology is going to be that immediate gratification, that tool that's going to allow them to quickly harness or quickly make instantaneous profits in the marketplace, only to find out that yes, on occasion they can make some profit, but over the long haul they cannot consistently make profit. And the primary reason for that is because technology has a very specific place in trading. Technology trades best under very specific time frames. Technology trades best under very specific market conditions. And technology, the reality, trades on a very infrequent basis. And so the common reason why people are not successful is because they consistently try to apply these technology-based trading applications in the wrong market conditions, and that's why there's no consistency. It's unfortunate because we're inundated with infomercial after infomercial on the TV. We can access whatever information we'd like to on the internet, and so it's become a common misconception because of all this information that we can go out, spend a few $1,000s on a piece of software, load it into our computers. And remember, I say technology, that can be clusters of indicators, proprietary plugins, anything that we're using technology to identify our trading opportunities. And so these individuals feel that once then they start receiving some live market data, that all they have to do is sit back and start to click their mouse, and all these profits are going to start rolling in. And so the pitfall number one is individuals gravitate to some type of technological assistance, thinking that's going to create create consistent successes for them in the marketplaces, only to find out that that's not the case. And once again, the reason is typically they apply them in an incorrect fashion. And so the first pitfall number one, once again, is gravitating to technological assistance. The reason for this is because the reality is markets are typically, as I said, is that the technology trades under very specific conditions. One is technology trades best on large time frames. That's why we're looking at a daily chart here. This would be a particular time frame that technology would trade best under. Two is technology, once again, trades best under very specific market conditions. And that's when market's moving in one direction for an extended period of time. And then three, the reality is technology trades infrequently. And so what happens is people are consistently trying to trade these technology-based applications on a daily basis, and they're just not effective because they're trading them in the wrong conditions. So the other thing is it requires larger amounts of capital to be able to effectively trade technology. You have to use larger stops. In other words, you have to expose yourself to greater risk. Because the rule of thumb is the larger the time frame, the larger the risk, so too the larger the profit taking or the larger the profit potential, and the less frequent the trading opportunity. Now at this point in the presentation, one of the things I ask you to evaluate as you move forward and you start to listen to our presentation and look at the information that we have in relationship to our trading methodology that we teach here at the Trading Institute, is that also identify the type of personality you have that's going to allow you to effectively trade. Because oftentimes when we see these infomercials on the television, and we see when they go through the testimonials and we see that they show a particular individual who was able to make a large amount of money in the marketplace, we focus solely on the performance aspect of what we see, because we see these large amounts of dollars in what appears to potentially be a relatively short period of time, and so that's what we focus on, and that's why we gravitate to these technology-based trading applications. When in fact, when we look at these popular infomercials or the information on the internet, we can read the disclaimers and see that they specifically state that this is a unique and exceptional occurrence that happened. In other words, it does not occur on a frequent basis. The other thing is also take into consideration that to achieve that potential profit objective, that individual may have been in the marketplace for anywhere from 8 hours to 3 days in some instances.